Have you ever been curious about trading stocks? The stock market is booming, and it doesn't matter if the stock market is going down, crashing, or if it's rising. You can always make money just as long as you know what you're doing. To me, it's recession proof, it's pandemic proof, and it's a great way to make supplemental income. So if you ever wanted to learn how to trade stocks, this is the channel. Be sure to like and subscribe if you haven't already. I'm going to actually analyze the Amazon stock, and I want you to watch carefully. If you're brand new, don't worry. There may be some jargon that you have no clue what I'm talking about. We actually have a stock academy that teaches beginners such as you the very basics, and we progress you to advance. If you are familiar with trading and you're not completely familiar with trading stocks, this is the right channel as well. And if you're familiar with trading stocks, but you just are struggling to become profitable, I want to show you a beautiful price action strategy that works 90% of the time. Why can I say that? Because I have receipts. I journal my trades every single day, and the strategy works. It's all based on supply and demand. Supply and demand rules the world, and I say that all the time with our academy. It doesn't matter what part of the country you're in, what part of the world you're in. Supply and demand runs the world. And I'm going to show you how to spot these supply and demand levels on our charts. And once you find that, you'll be able to get in that stock at precise entry. And from there, it's all profits. So let's go ahead and dive into it. Yeah, I know I got problems. All right, guys. So for those who are new, this is a stock chart. I look at this because it tells me what happened with Amazon over a period of time. Now, remember, I said if you're brand new and you have no clue what I'm talking about, don't worry, we have an academy and it goes straight into everything. If you're really looking to have supplemental income or completely just replace your income overall, I think that trading the stock market is ideal. So this is our chart here, and I'm starting on the daily time frame. The reason why I start on the higher time frames is because it gives me the overall picture of what's going on. So overall, you can see how Amazon has been trending up, right? It's good for Amazon that Amazon is trending higher. And then it came to a point where price dropped right here. Now, why did it drop? This was all from tariffs. This right here, this zone here was from February until April. And when April happened, if you guys can recall, that's when there was a pause on tariffs. So most stocks in the US stock market started to rise in April when Trump paused the tariffs. Now that I know that we're in an uptrend, what I like to do is simply draw a trend line. Now, you don't have to do this, but this is just visual aid for you so that you can see how price is rising. Okay. So here's my trend line. I'm tracking up. And typically in an uptrend, you want to buy because it's less riskier. In a downtrend, you want to sell and you can profit because it's less riskier. So as an investor, that helps me to identify what trades I want to get into. I want to get in the least risky trade that I can ever do that as an investor. It doesn't matter if you're investing in the real estate market. You want to make sure you're buying a home that is least risky. Same thing with the stock market. So now that I've identified that I'm in an uptrend, what I like to do is trap price. And what I mean by that, here's price. This is where price is currently at. It's currently trading at $222. And I like to trap price from the top and the bottom. So this is what I mean. This was the highs before price started to drop. I'm going to call this high a supply level. Remember, I told you in the beginning in the intro, supply and demand rules everything. This is a supply level because this is how high price for Amazon had reached before it dropped. That being said, I'm going to find a demand level here, okay? Now notice how my chart is starting to look a lot better, meaning that I'm predicting price to come back up to this level, and I really do believe it's going to come back to around the 230 to 240 mark. So that being said, let's find a demand level. I'm going to get my rectangle tool here again, and I'm going to draw this demand level right here, or you can call this a support level. Now, why am I drawing this right here? I'm going to get this and draw it a little bit wider and encompass all of price action. So what I'm doing is I'm noticing how price rejected from this level here. This was our lower high in our downtrend. And then this was our higher low in our uptrend. This was our higher high in our uptrend. So all of this level here, I believe, will be a fantastic area as a support zone. I can even pull over this chart a bit more. And you can see how it encompassed the previous uptrend from the higher low and the higher high, a bit of the higher high. So this will be our dominant support zone here. Now that I've trapped price from the top, from the bottom, what's going to happen? Remember, as you buy in an uptrend, it's always less riskier, but you never want to buy when price is at a higher high. For those who are new, this is what I mean. We start with the low here in our uptrend. We get to a high, and then we make a higher low because it's higher than this low, a higher high, higher low, higher high, higher low, higher high. In an uptrend, you never buy at a higher high. It's just riskier because the next ingredients for an uptrend is a higher low. This is where you preferably want to buy. It's the exact same concept as you buy low, you sell high. We're currently at a high, so you don't want to buy. You want to buy when it's low. So how low do I want price to get before I look to buy? Remember, the sequence in an uptrend is higher highs, higher low, higher high, higher low, higher high, higher low. So we're currently at a higher high. Where's our higher low going to be? What I would look or suspect is I'm going to find where previous higher highs and higher lows was. Look at this right here. This was my higher high in my uptrend. How do I know? Because it's a pivot. When price came here, it dropped abruptly. It's a pivot. Here's my higher high right here and my uptrend here, and then it pivoted to the downside. That is equivalent to this same zone right here. If I draw a line right here, it's the same area right here, right? Here's my higher high in this uptrend here, and then here's the higher low. So if price come back down to this zone, 9 times out of 10, in my professional opinion, I've been trading for a long time and also journaling these trades. In my professional opinion, I believe price will reject and head to the upside. This is where you want to buy. So notice how I draw my rectangles pretty wide. So I'm going to delete this bottom one here because it's irrelevant at this point. I'm only looking at my pullback here. Let's zoom in. And so when price happens to come back down to this level here, this is when I would zoom into a lower time frame. Remember, I'm on the daily time frame. I don't care about the lower time frame until I get close to my entry because that's when I'm going to find a sniper entry. Okay. As price come and pull back here, now I'm looking for consolidation on the 1 hour time frame or the 30-minute time frame. It doesn't matter what time frame you're looking to drill down to, just as long as you can see these candle patterns. Notice right here we have these candle patterns here at this higher high. There's a double top. A double top is a reversal. So this is our mini reversal, and then it starts to consolidate. And now I want price to come back down here because in the past, every single time it came here, there was a reaction, right? Before here, a reaction. This was previous resistance. This will be our future support. So anywhere between $215 a share to as low as $212 a share, I would look to buy a few shares and then I would ride it up. Now, how long do you want to ride it up? It's completely up to you. If you're a swing trader or intraday trader, that's up to you. But a safe place to ride it if you're an intraday trader or if you want to stay in the trade for maybe a day or two is back up to this high. So we're looking for price to drop first, buy at this level, take it back up to this high. If you're a swing trader, you can hold it even longer because remember, this will be our higher low. Let's go back to the daily time frame, spread the chart out a bit. This will be our higher low, and we are following that sequence of higher highs and higher lows. So this is what we want to do. We want price to come down, enter our trades here. You can take it back here for an intraday trade, or if you want to swing trade it, take it up higher because look, the past told us it's going to go this high, and I believe it's going to continue to climb back up to this supply zone right here for our continued uptrend. Now that can take several weeks, obviously, because each candle represents a day, and it took several weeks the same to rise up to this level before. Now remember, one key thing is as an investor, we want to make sure we're investing with the least amount of risk. Amazon is a Fortune 500 company, is continuing to do well. It continues to climb. Many people are buying it. Many people invest in it. So it's safe to say that this investment will be perfect to buy at least to this resistance zone. Buying Fortune 500 companies are a safe bet. And you always want to pay attention to fundamentals and news. Like I said, tariffs is the thing that dropped it in the first place. But overall, in the past, Amazon continues to thrive and rise. So that's what we're looking for Amazon. This is my analysis. I would look to enter anywhere between $215 a share to about $213 a share. And me being a swing trader, loving to hold my trades for several days and even several weeks, I will buy here. I will probably partially exit some trades around this minor resistance, holding some more trades, then a pullback and continue to climb back to the supply level around $240 a share. All right, guys, let me know if this makes sense. And if you haven't subscribed already, what are you doing? Make sure you hit that thumbs up button. It's free. And if you are looking for supplemental income and using the stock market to do so, you're going to need foundation education. YouTube is great. It can only take you so much, but you need structure, guidance, hand holding. And our academy is a lifetime membership. So as soon as you join, you're with us for life. You can do it at your own pace, especially for those who are working 9 to 5 and they don't have every day to work on it. It's self-paced. And then we have a private community where you can message myself, message Kenya, and we'll be sure to respond. We trade live weekly and you have 24/7 hands-on support from myself and from Kenya. That being said, guys, comment below if you agree with this. If you don't agree with this, I definitely welcome your analysis, just know that high impact news can change any analysis from war to tariffs to pandemics. You just want to make sure you're up to date with those type of things. That being said, guys, have a blessed day. I'll see you in the next analysis. God bless.